Do you want to work? I don't want to work. I don't think anybody wants to work. That's why the fantasy, financial independence and building wealth is so appealing to everybody. Is like you have this idea that you can, if you just save, make some sacrifices now, you can build up a nest egg or portfolio that provides income, maybe start some other side streams of income, and then eventually that'll be enough money to replace your current income, your job, your W-2 income, and then you'll be able to quit and do whatever you want. So in this video, we're going to take a look and we're going to kind of run some numbers and see how much money I need to kind of quit my job. Not necessarily quit my job, but to be kind of financially independent to the point where I work if I want to work, not because I have to work. Now, I've never lived in a real high cost of living area like New York City or San Francisco or anything like that. And I'm single and I have no kids, so I don't have those expenses. So my cost of living is going to be a lot lower than other people, and that is what it is. I've never been much for material possessions either. So we're going to look at my numbers and think about how much I need to make this happen. Now, I've been selling options on the wheel strategy for about a year now. Now, the wheel strategy is just a safe way to sell options, and you sell a put and you collect your money from it, and then you will sell if it gets assigned when you sell the put, then you'll just sell a covered call until it gets called away, and you collect premium that way. And it's a safe, steady, reliable source of income. But how much money can you make doing this? So during the first year, actually started out, first couple months I was a bit slow on it, and I only sold like 2 or 3 positions per month, and I was just kind of getting my feet under me and getting used to the process and getting comfortable and confident on how it all worked. Now I sell a lot more and I have multiple positions open, and I always got puts and calls going, running the wheel strategy. And I've done it enough to the point where I've got some good information and I can make some decent assumptions about what I want to do and how it works to see how much money I need to do this. Now, there's a couple different ways to sell options on the wheel strategy. One way to do it is you sell weekly contracts, and that is, on Monday you sell the nearest expiring contract, and that'll be expiring on Friday, and then you just keep doing that on a weekly basis. But all companies don't do that, or they don't have those contracts open, so you can't just sell weeklies on every company, but some do, and they do offer more money than a monthly contract, but there's more risk involved. If you sell 4 weekly contracts, it's going to equal more than 1 monthly contract. But, it's not free money. There's some sort of risk in there somehow, and that's a risk I want to avoid. Another thing I don't do is sell options on these highly volatile meme stocks. Things like GameStop and AMC, Carnival Cruise. These things that are just, you can sell the contracts and make a lot of money doing it, but there's a lot of risk involved in those too, and that's another risk that I don't want to take on. I sell my contracts on like big companies that you've heard of, S&P 500 companies that are profitable, things like Pfizer, Intel, Oracle, Walgreens, things like that. Those are a few companies that I regularly sell puts and calls on. Now, I do sell some higher risk positions, like I do sell contracts on Palantir and Snapchat, and I did sell contracts on Workhorse and Neo, but I didn't really like those companies, so I don't sell puts and calls on those really high risk companies. So over the past year, I've opened up 79 different positions. And of those 79 positions, I was assigned on 7 of those. So the puts were eventually assigned to me on only 7 of those positions, and then I had to sell covered calls on them. Of those 79 positions, 13 are open right now, and 3 of them are actual covered calls that have been rolling for a few months to reduce my cost basis until they get called away. So 10 of those positions are puts that I have open right now, expiring next month, or a few of them in what would be that'd be May. A few of them expiring in May. And only 6 of these were actual losses, where they got called away from me, and I lost money on the position as a whole. And my average annualized return per position is 23%. But is 23% sustainable? Can I count on that number if I was to quit my job and I only had the wheel strategy to count on? One thing that'll help us understand if this is a good number is the VIX. And the VIX is the CBOE Volatility Index. And it kind of measures how volatile the stock market is. And the more volatile the stock market is, means the higher you can sell premium for. The higher you can sell puts for, and the higher you can sell calls for. Now, right now, the VIX is trading at about 20. We're at 1976. And we go back for the past year, we're bouncing around, 25, let's say an average of 25 or 30. So we definitely are in a higher volatility market. But we have to kind of zoom out to, let's look at this 5-year chart. And then we can get a better idea. So for like 2016, it got low as 11. Well, we got 9. A low of, 9.5. And then we had a little spike there. There's a little correction in 2018. It got up to about 30, bouncing around at 12. So the average for the past year is a bit higher than it was in the past 5 years. And we zoom out. Let's go all the way back to the big 2009. Got all the way up to like 72, and then it was bouncing around to 2012, and then after that it started falling and hung around 13, 14, and 2013, bouncing around there. So I guess you probably say like an average from around 2012 to 2019, it'd be somewhere around, maybe 15 or so, 19 on the high end sometimes, and we did have these big spikes above that. So it would be a little more difficult to get this higher premium for the same stocks with a lower VIX. So let's take that 23% and cut some off the top. Let's drop that to 18% to account for a lower VIX, lower implied volatility. So it'd be harder to sell so much premium. So we've got 18%, and then let's take taxes into account. So anything above $40,000, you're going to be in the 12% tax bracket. So we can take that 12% off of there, and then we'll round down, so that gives us 15%. And a good number for me would be $2,000 a month. I would be really happy, and I'd feel really secure making $2,000 a month. I think I'd be fine. I could support myself, and if anything happened, I could work an extra part-time job or some other thing to make a little extra money if I needed to. But I'd be really happy with that $2,000. So that $2,000, $24,000 a year. Divide that by our 15% return. I need $160,000 in my options account to support me. And yeah, if I needed more, I could do some other side job to make ends meet. And I don't have a family, so if I did have a family and I wanted to provide security and support for them, let's bump that number up to $3,000 a month, and that would take our $160,000 into my options account, and then it would be $240,000 a month to support my family. Now, I don't know how much it costs to support a family, but that $3,000 would make it really I'd feel much safer, and I know that my family wouldn't be, we wouldn't be out in the streets with that extra money coming in. Now, as far as healthcare goes, in the United States, healthcare plans are really expensive. You could, get a higher deductible or work a part-time job to help pay for that, and you can make that work. You could also, if all your money is from, is income from options, you're kind of location independent. So you could also move to a different country where they have some sort of universal healthcare plan. And I hear good things about Spain and Portugal, but I don't know. I don't really know too much about them, but I just feel like I've heard that they have good healthcare for like the expat community. But if I did have this money coming in, I don't think I would quit working, because I still want to build up. Now, I still eventually want to reach the goal of being a millionaire someday. So I would keep working and, keep building. I want money to reinvest itself on top of being able to support me. And I think even like times where I don't, like sometimes I have days off, and if I don't do anything on my days off, I actually feel like I really don't feel good about it. If I just sit home and I don't really do anything, I just like have a bad feeling. I don't like it. I feel like I wasted the day away. It's not a good feeling. So I would still continue to work and, try to achieve goals and be productive and all that kind of stuff. I'd never be just like a beach bum and sit around and do nothing if I had this money coming in. Go ahead and leave a comment down below on what you think of my numbers. Is my numbers, you think that's too low? $160,000 for one person and $2,000 a month, or $3,000 for some sort of family like a kid? What about my returns, my assumptions at 15% after taxes? Do you think how reasonable do you think that number is? I see a lot of comments on like the subreddits about selling options and the wheel strategy, and a lot of people think that 2% a month is pretty reasonable. But who knows? What are your thoughts on that? If you're still watching, give me a like. I'd really appreciate that. Subscribe to the channel if you haven't. And then I want you to go have a good day, all right? Justin out.